As crazy as Tesla has rallied in the last few weeks, over $1 trillion market cap, listen to Dan Ives' new price target here and his justification for it, and then we'll come back and talk about this.
Yeah, I think it's the autonomous piece. I mean, if you look at full self-driving autonomous, I could argue it's the most undervalued AI play in the market today. And I think autonomous cyber cab in the timing, I think could get accelerated 2 to 3 years. And that's important in terms of from the sum of the parts, the stock, that could add $1 trillion of valuation alone, and you could be looking at 20, 30% more revenue per year that you even see today.
You think $2 trillion valuation over the next 12 to 18 months is reasonable?
I think it's conservative, potentially, if they actually execute on the vision that I see, not just in terms of autonomous and AI, but really it's more about that software penetration within Teslas from an FSD perspective. It changes the whole business model.
All right, he said that within the next 12 to 16 months or 12 to 18 months, Tesla can actually see a $2 trillion valuation, which is double where it's at now. That would take Tesla to about a $636 price target. Now, let's break this all down, as this is one of the few channels that told you that Tesla would break that $1 trillion market cap in 2024. I said that in the video in April and the video in July. So first, we're going to break down the fundamentals. Then I will give you a sense of the technicals and where we are. And then I want to go over a few potential Tesla options plays from here. I put my money where my mouth is. Here's our current Tesla position in one of my Thinkorswim accounts, up 75% as I added to when it was at 152 and when it was at 220, the same exact things that I told you in videos here. And later on, I'll tell you how you can join the investing group, but for now, I want you to listen. So let's get right into it. So in terms of the AI play, right? If you are not a believer in the AI play, then obviously there's nothing for you to do here as an investor. Sure, you can trade Tesla, but from an AI play, people like Dan Ives truly believe that within the next 2 to 3 years, we will all be hailing cyber cabs.
I mean, I think like me and you, I mean, we could be in a cyber cab in the next 2 to 3 years.
Let's leave the Optimus robots aside for now, even though that's a whole other business model, right? But if we're just talking about the autonomous driving, not only is FSD within Tesla's cars, they're expected to ship 2 million cars next year, and there's already millions of cars on the road. So just FSD alone within Tesla, how much that will add to the revenue of Tesla, as well as potentially licensing out FSD to other car companies, and eventually being able to buy, to rent out, to hail yourself a cyber cab. So if you truly believe that Tesla is at the forefront of this and no other car company comes close, I know you guys, some of you will say Waymos, but I don't know if you guys have seen Waymos on the street. 1, their margins are terrible. 2, they're not scalable. 3, they require a whole bunch of LiDAR. So if we're talking about the cyber cabs being, coming in at a $30,000 or under price point, if we're talking about them just being able to use the roads, sort of how Tesla uses now without full unsupervised driving, but obviously you could see that we're getting there. There isn't really another company that can compete on the road at the moment. So if you can imagine a future that is full of autonomous Teslas as well as cybercabs, that is where Dan Ives is getting that $1 trillion estimation. Now, obviously, it's very hard to estimate nascent technology, things that are new to the market. But this is the whole point of the stock market. The stock market is forward-looking. The stock market isn't rewarding past behavior. The stock market is a tool for investors and traders to be able to speculate on where the company is going. And that is why you see insane valuations, is because the more that investors can speculate about the future, just like with NVIDIA and AI, right? The higher the multiples are going to be, the higher the valuations are going to be, the higher above the book value, the higher above the sales a company is going to trade. This is what a lot of people don't get about the stock market, is that momentum as well as expectation is very hard to measure. Yes, you can look at the book value of a company. You can look at the sales of a company or the price to sales ratio of a company. You can look at its free cash flows. But if you are just imagining a scenario in which almost every car on the road in the future is going to be a Tesla electric car or Tesla Cybercab, and that you're adding a $1 trillion valuation to the company, it's going to be very hard to stop that kind of momentum when it comes to the chart, because investors are trying to price the future, but they're trying to do it now. That is why in that interview, Dan Ives said that if the company can show that it is close to doing these things, and close could be 2 to 3 years, right? It doesn't have to be next week. It could just be within the foreseeable future. That's what the foreseeable future means, right? That you can see it, and not something that's like, oh, that, we might do that in 20 or 30 years, but within the foreseeable future. And that's where the Donald Trump presidency comes in. Tesla would need NHTSA approval to deploy a vehicle without human controls. What is the NHTSA? It's a National Highway Traffic Safety Administration, and this is a government agency. Guess who Elon Musk is best friends with right now? Donald Trump, who is the head of the entire government, or will be, I should say. So just from a business standpoint, this is an extremely smart move, right? If you put your dollars behind the candidate who you think is going to win, once that candidate wins, if that candidate wins, right, you expect them to return the favor in some sort of way. So any regulation that is enforced by the government where Trump can potentially speed things up for Tesla, you know that is going to be a likely scenario where if Tesla needs a little bit of a faster action from the government in order to speed approval so that they can continue to build. What company's in a better position than this guy's to speed that along? One other thing the government is involved with when it comes to Tesla is regulatory credit sales. So a huge portion of Tesla's net profits or net income come from regulatory credit sales. That's been the case since 2021. And if we take a look at the regulatory credits, the federal government provides Tesla with regulatory credits at no cost for building environmentally friendly electric vehicles. Now, this isn't what Dan Ives was talking about. Obviously, he was talking about AI and autonomous. But if we take a look at Elon Musk's friendship would-be president, there's no way that these regulatory credits that come from the government that they would slow down. Either they would remain as is, or they would even ramp up. So if Trump fast tracks Tesla's autonomy and you look at where their revenue is now, as a matter of fact, these are the best 2 back-to-back quarters that they've ever had, right? The best Q2 and Q3 combined. If in the next few earnings calls, they can convince us that they are on a fast track to autonomy, then I don't think it's out of line for the market to start pricing in a $2 trillion market cap. Now, for me personally, I would be a little bit more conservative because we're not saying that the car sector is worth $1 trillion alone and then the autonomous part is worth another $1 trillion. I think part of the current $1 trillion valuation, obviously, these aren't only cars, right? There are much bigger car companies than Tesla overall. But this has to do, the $1 trillion valuation already bakes in the future of autonomy somewhat, right? And it already bakes in energy storage and all that stuff. So for me, I think $2 trillion, I never ever put it past the market to drive momentum. But if we're just speaking in terms of more logical valuations, I think that in the short term, $2 trillion is a little bit rich. I'm not saying it won't get there. I'm just saying that, we can't look at the car sector as $1 trillion and then an added $1 trillion for FSD. I think baked into the current $1 trillion is already some form of FSD advancement, if that makes sense. So $1.5 trillion in market cap would be around $477, which is, to me, a little bit more conservative than obviously Dan Ives' $636 valuation. Now, one thing's for sure, I do think it is getting back to all-time highs during this bull run here, during this Santa rally. I do think November and December will continue to go up, and then we'll see what happens in 2025. But I do think all-time highs on Tesla, which I think it hit a high of around 414.5. I think that was the all-time high in Tesla. I do think that is inevitable. So why don't we go ahead and talk about the technicals here? But I posted this on X. By the way, follow me on X for daily free trading and finance content, as well as IG. But back in September, I said that if it can pop above this trend line, then 300 is going to come very quick. And then later in October, I said Tesla has never broken out of a multi-year downtrend and not revisited the high of the downtrend. So I posted this here, which let's take a look at the real chart, but it's basically this. And you can see that Tesla does have these super cycles where it bases for a very long time. If we measure it here, this first one before it broke out is 913 days. days. The second one before it broke out was about 1,000, 1,100 days. And then right here, this was actually the most violent downtrend that we saw before it broke out, more like a bull flag. But this one lasted also around 1,100 days, very similar to the one back in 2015. So when we see these long bases here, we tend to see, Tesla break out with violence. The first breakout was around 500%. The second breakout was around 2,900%. And if we're talking about, let's just take Dan Ives' price target of 600, it's very conservative, but he said we can get there within the next 12 to 18 months. So that is around, another 90% from here. And you can see here back in July 24th, here's my 220 buy on Tesla. And back in March of this year, I said 152 is my ultimate buy target on Tesla. And if you want to join all my alerts in real time, I also go live every single day at market open to day trade. Click the link in the description below. People will pay a ton of money to stream some useless TV service, but you get to watch us trade live every single day. And in my view, it's really reasonable. So click the link below, come and join us. I go live every single morning. And you also get all of my long-term buys as well. All right, so in terms of plays, as I said, I think it's inevitable that we get to 415. Actually, it would be very hilarious if we got to 420. But anyway, that 415 level, I do think that it is inevitable to get to that level. However, is it going to be a straight line up? I mean, the way that the stock is acting, it certainly could be. But there's no way in good conscience that even if I was trading, I can just FOMO in here after these 4 days of insane green, right? In 4 days, we rallied 43%. There's no way that I can FOMO here. So for me, I need to wait for some sort of retracement. Now, on the retracement, what levels are we looking at? There is a clear level here. I know that you guys can see it. You don't need to be master technical analysts, but there's a clear level at 270. There is also a clear level here at the 300 range. So 300 and 270 would be the next points that I would be looking at to play a retracement trade, potentially back to that 415 level. Now, as I said, I already did my job in terms of the shares, and I bought all the shares that I wanted to buy, and that is up 75%. So we're not talking about a long-term investment. Well, we could be talking about a long-term investment for those of you that didn't get in. But for me, this right here is just a trade. I already have my shares for a long-term investment. So what I do from here on out would likely be more of a swing. But a couple things. I want you to take a look at these expirations here. We're seeing a ton of flow come in for Tesla, right? A lot of 2026 options here. January 2026, January 2026. This is the 300 strike. This is the 500 strike. December 2025, all across the board, 475, 300, 280. And then a bunch of leaps for the middle of 2025, right? Price points going all the way from 295 to 500. So what I likely will be doing is we'll be engaging in leaps at these retracement points, right? Give us quite a bit of time for expiration. That way we are not subject to a lot of theta volatility. I will also likely sell a bunch of cash secured puts. So if we get to that 300 level, I'll sell the 270 puts. If we get to the 270 put level, then I'll sell another round at maybe 250 or 240. That way I average in my buys. Remember, when you sell cash secured puts, if you are assigned, you have to buy 100 shares of Tesla. And what we could do on those leaps, I'm not going to do it now, obviously, because I'm waiting for a retracement. But what you can do on leaps is not only can you buy leaps, so say that we went out to September 2025, and let's just say that we bought the 300 leap. In order to reduce your cost, you can then sell calls that are closer to expiration than your leap. So if you bought the September 2025 leap at the 300 price point, then, from March on out, for example, we could sell the calls that are above that leap. And if we get assigned on those sold calls, right, you would sell maybe like the 450 call for $2,400. And if you get assigned on those sold calls, then you would just exercise your leap in order to give up the shares. And if you sold the 450 call, for instance, and Tesla never got there, you keep that $2,400, and then you can go ahead and sell a call in May, for instance. This is called a poor man's covered call. Now, if Tesla just continues to run up, well, guess what? I have those shares. Now, one last thing that I want to say about Tesla and about the market in general, right? We still are coming off the heels of rate cuts, and we likely have more rate cuts to come. I don't potentially think that, obviously, there's a lot of euphoria because of the election election. November and December are usually very bullish months. There are asymmetrical rallies on things like Tesla and Bitcoin because those specifically have to do with Trump being the winning candidate. But we could very well see a 2025 recession. As I've stated before in this channel, I'm not going to try to speculate how deep a recession will be if it comes, but I think it's something that we have to be aware of and we have to prepare for, right? So for those of you that are buying the tops here, you have to be very aware of what can potentially happen when you are buying these things at all-time highs, right? The SPY continues to make all-time high after all-time high, same as the NASDAQ now, same as even the small caps making all-time high after all-time high. If you don't have a heavy portfolio that you bought deep in corrections and bear markets, yeah, you do have to be obviously more prepared than someone that does. But also make sure that you are prepared to buy it, because as I've showed you on this channel time and time again, those of us that get rich off of these huge moves that you see, like the ones that we've seen in the last couple of weeks, are the ones that prepare themselves for those moves. The ones that aren't afraid to buy the fear, the ones that do analysis on what could potentially asymmetrically rally based on certain conditions. So for instance, the Bitcoin miners would rally if Bitcoin rallied, Bitcoin would rally if Trump won. How to position yourself for these things so that when the rallies happen, you don't get left behind. My next video, or the one after that, I will be doing a free investing course, a full free investing course. So definitely watch out for that. But in the meantime, make sure that you sign up so you don't miss any real-time alerts. I received this pretty awesome message from this member the other day. I'm not going to reveal his name, but he said, "Hey Z, I just want to say thank you. My total port just crossed the 7-figure mark. I'm pretty blown away right now." And honestly, that message right there is almost better than anything I've ever done with this channel. So my main goal is to teach people how to invest properly so that they don't miss rallies, and how to trade responsibly with a proper risk management plan so that they don't go crazy, gamble, blow their accounts, etc., and make a good income in order to then take that and throw it into the market and compound those gains. Anyway, traders, let me know your thoughts below. Do you think Tesla is going to hit that $2 trillion market cap? Do you think that Dan Ives is in over his head? Do you think he's out to lunch? Let me know your thoughts on Tesla below. Also, let me know what your cost basis is on Tesla for those of you that already have invested in Tesla. And if you missed this entire rally because of fear and you really want a Tesla, I also want to hear from you. Let me know in the comment section below why you didn't buy into Tesla during this whole time, and whether you regret it or not. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.